The U.S. dollar is the cornerstone of the global economy, but is its reign nearing a tipping point? Recent trends suggest that the dollar is overbought and overpositioned by investors who seem blinded to the mounting risk that the global economy faces right now. So if you're holding assets in dollars or looking to diversify, this moment might mark the dawn of a seismic shift for you. So in this video, I'm going to break down 3 critical factors shaping the outlook for the dollar and what they mean for commodities, global markets, and your portfolio. Let's talk about this one. All right, so I want to take a quick minute and share some thoughts in reference to just the recent dollar activity, or the Dixie as it's referred to, and how due to the recent tremors in the monetary structure, it looks like the Dixie is getting to somewhat of a bid right now. And so a lot of people are sharing their 2 cents on the matter, so I thought I would as well, just to highlight an assortment of things we're paying attention to. Because regardless, as I've always said before, there will be no financial future in a Federal Reserve note in the long run. But in the short term, anything is possible. And as always, if you guys want to see more of these little short takes, definitely hit that thumbs up button to show your support for the channel. And more importantly, drop a comment down below. Let me know your thoughts. And feel free to add to the conversation as well. And then if you're new, make sure you subscribe so you never miss an update when I put one out. But sweet and simple, we can't talk about the dollar without talking about the Federal Reserve and their rate cuts. So ultimately, it's turned into a double-edged sword. And no matter what, this won't end well. And so the Federal Reserve literally is cutting interest rates again, but slower than anticipated due to a persistent high inflation point. So historically, rate cuts weaken the dollar because they reduce the appeal of dollar-denominated assets for global investors. But this time, the story runs a lot deeper. Think of the dollar as a star athlete with an injury. Rate cuts are like reducing the training load. It gives temporary relief, but signals to others that the athlete might not perform at peak levels for much longer. And so similarly, as central banks like the European Central Bank and the Bank of Canada aggressively slash rates, they create competitive pressure, luring capital away from the dollar. So this dynamic could spark a pivot away from the US-centric investments towards emerging markets, as well as commodities. And so a key reminder is back in the 2008 financial crisis, because a similar environment of aggressive rate cuts led to a 20% decline in the dollar over the ensuing 18 months. So that's something to keep in mind. And then a second point that the dollar will impact is the fact that the commodity space is starting to rotate a little bit. And that's creating a silent surge. We're all familiar with the obvious gold, copper, and energy products as they're undergoing a significant rotation, with many breaking multi-year performance records. And so this rotation signals a transition away from financial assets towards real, tangible resources. And so the question would be, why? Because a weaker dollar relative to purchasing power makes commodities cheaper for international buyers, which then fuels demand. So a good example would be to imagine for a second the global markets like a seesaw. So when one side, which is the dollar, tips down, other side rises, which are commodities. So over the last 2 years, we've seen spikes in everything from gold to orange juice, suggesting that smart money is already moving into the commodity space. A good example of these recent price surges, you need to look no further than the price of gold, how it rose by 15% in 2023 alone, basically outpacing traditional stock indices like the S&P 500, which only gained 9% during the same time period. And so the next, and probably the most important for my strategic speculators, will be surrounding the emerging markets, because they appear to be waking up as well. And so literally, as the dollar peaks, emerging markets stand to benefit immensely. And so countries like India, Argentina, and Brazil are seeing capital inflows, which is boosted by the dollar's potential decline. And so a stronger dollar suppresses their growth by inflating the cost of debts and imports. And so a weaker dollar flips that script entirely. And so a good way of looking at it is to picture a runner shedding extra weight before a race. And that's what happens to emerging markets when the dollar eases. So Brazil's equities, for example, surged nearly 18-fold between 2000 and 2009 during that last significant downtrend, while commodity-rich economies like Peru and Chile are well positioned to ride the coming wave. And so a lot of market watchers and forecasters are predicting that Latin American equities are expected to outperform global markets, with an average projected growth rate of 7% annually over the next decade. So basically, what are these 3 factors and why should it matter to you? And so basically, these shifts are already set the stage for what could be a decade-long transition in global capital flows. So commodities are poised to outperform. Emerging markets are gaining traction, and the dollar's dominance is under scrutiny. So whether you're a seasoned investor or just dipping your toes in the water, keeping a finger on these trends could mean the difference between riding the wave and being left behind. So once again, as always, just taking a minute to share my 2 cents on these matters. And instead of focusing here on the U.S. economy solely, it's always good to zoom out to how the dollar impacts the global economy in general, because no matter what, the Dixie only tells one side of the equation, while the actual purchasing power of the same instrument tells it completely different. And no matter what, it's become quite obvious now that nations are diversifying away from the Federal Reserve note and underlying systems. As that continues to unfold, it's going to be very inflationary, meaning that all those dollars and debt IOUs that have been created over the last couple years, especially during the COVID crisis the world faced, might just come home to roost. Therefore, more inflationary pressure on top of all the other things that I didn't even get a chance to mention during this video. But as always, I don't want to just continue to tell you, talk about what could be considered some doom and gloom without giving you strategies and suggestions as well. As always, I always include resources in the description. So if you guys are interested in getting involved directly in the silver business and learn how to position yourself for the future by helping other people secure their wealth in silver, then definitely you might want to consider joining the silver team. And the link below is mysilverteam.com. And then also, if you guys haven't had a chance to get a hold of the most affordable gold on the market, then you might want to consider getting some of these 24 karat gold notes as a way of hedging and protecting yourself against these. Once again, just share my 2 cents on the matter. If you want more information and details on how to get the gold, just go to buygoldnotes.com. Links in the description. Other than that, curious to hear what you think. If you found value, as always, hit that thumbs up button, drop a comment, and I'll catch you guys later.